Let's break it down and make sense of what's really happening behind those wild crypto price swings. Ever felt like crypto charts are a roller coaster? One moment, prices are shooting up, and the next, they're plunging down. Prices soar one day, plummet the next. It can feel unpredictable, almost random, especially for newcomers. But if you look closer, there's actually a method to the madness. What seems chaotic is often part of a repeating pattern: market cycles. These cycles are like seasons in nature. There's a period of growth, a peak, a decline, and then a quiet phase before it all starts again. Understanding these cycles is like having a map when you're exploring unfamiliar territory. It helps you anticipate what might come next. Crypto markets move through phases. First comes growth, then excitement and hype, followed by decline, and finally a period of quietness or consolidation. These cycles are driven by human emotions: greed, fear, hope, and doubt. That's why they tend to repeat over time, no matter the asset. People rush to buy when prices are rising in excitement, and often sell in panic when prices fall, creating those familiar waves on the charts. Recognizing these phases can help you make smarter, more confident decisions instead of just reacting to the latest headlines. Think of it like a new restaurant. At first it's quiet, then word spreads and it gets packed, and eventually, things settle into a normal rhythm. Crypto markets work in a similar way. Early investors get in, media hype brings a crowd, and then things stabilize as excitement fades. The smartest investors often enter early, ride the wave as the media amplifies the story, and then prepare for the inevitable cooldown. In a nutshell, understanding market cycles gives you an edge, helping you navigate the ups and downs of crypto with greater clarity and confidence. Let's dive into the 4 main stages of a crypto market cycle. Understanding these stages can help you make informed investment decisions. First is accumulation, the market's winter. This is a period of low prices and low interest. After a crash, prices are low, interest wanes. The market seems to be in a state of hibernation. Smart investors buy quietly, seeing long-term value. They recognize the potential for future gains. Next is the uptrend, or bull market, the spring and summer. This is when the market starts to heat up. Prices rise, skepticism turns to optimism. Investors become more confident, media turns positive, FOMO kicks in, prices soar. Everyone wants a piece of the action. Then comes distribution, the peak. This is the market's climax. Euphoria reigns, but smart money sells to newcomers. Prices stall, volatility increases. The market becomes unpredictable. Finally, the downtrend, or bear market. Autumn and winter. The market cools off. Panic selling pushes prices down. Investors rush to exit their positions. Fear dominates. Media declares crypto dead. Negative sentiment is everywhere. Prices fall, wiping out gains. The market seems to be in free fall. The cycle bottoms, leading to a new accumulation phase, and the cycle begins anew. The bull market is the most exciting phase. Fortunes are made, driven by rising prices. It starts slowly, unnoticed by many. Market sentiment shifts from despair to hope. Public participation explodes. Media hypes up. FOMO drives demand. Prices skyrocket. Euphoria takes over. Every dip is a buying opportunity. Overconfidence leads to risky investments, but no tree grows to the sky. The bull market peaks. Latecomers buy from early investors. Momentum slows. Volatility increases. This is the distribution phase, where smart money exits. Euphoria remains, but market strength weakens. New investors often buy at the top, just before the downturn. After the bull run comes the bear market. The downtrend begins. Selling pressure overwhelms buying. The first drop is sharp, catching many off guard. Panic sets in. Media flips the narrative. Fear dominates. Panic selling accelerates the decline. The bear market is long and painful. Retail investors leave. Trading volume dries up. The market becomes a ghost town, but it serves a purpose, cleansing the market. Weak projects fail, strong ones survive. For patient investors, it's a time for opportunity. Smart money buys at the bottom, setting the stage for growth. Navigating crypto cycles can be tricky, but with the right strategy and mindset, you can thrive even in uncertain times. The crypto market is fast-paced and ever-changing, so it's important to approach it with both caution and curiosity. Always have a plan, know exactly what you're buying, why you're buying it, and how it fits into your overall financial goals. Don't just follow the crowd or act on hype. Decide on your goals. whether it's long-term growth or short-term gains, and stick to them even when the market gets volatile. Consistency is key. Use dollar-cost averaging to reduce emotional investing. By investing a set amount regularly, you can avoid the stress of trying to time the market perfectly. Manage risk carefully. Never invest more than you can afford to lose, and always be prepared for ups and downs. Protect your capital. Take profits during bull markets to have cash ready for new opportunities. Don't be afraid to secure gains when the market is strong. Zoom out and be patient. Cycles take years to play out. The biggest rewards often come to those who wait and don't panic during downturns. Understand the cyclical nature of crypto and cultivate a long-term perspective. Markets rise and fall, but trends emerge over time. Patience is your superpower in this game. Staying calm and focused will help you make better decisions and avoid costly mistakes. The market rewards those who think in years, not days. Let your investments grow and compound over time. Stay curious, keep learning, and enjoy the journey. Because in crypto, every day brings something new to discover.